for joining us for this discussion on institutional interest in decentralized finance, otherwise known as DeFi. It is a trend that we've been watching accelerate for some time now. And I confess that as recently as the middle of last year, I thought that institutions would take a long time before they trusted decentralized platforms with unaudited code. I'm very encouraged to say that I was wrong on that. I say encouraged because although DeFi does come with additional risk, quite a lot of risk, the potential for some of the applications that we're seeing emerge to change how our markets and financial system works is exciting. For me, it's not so much about the disintermediation, although that is a fascinating concept that we'll get into more today. It's also not so much about the reduction in costs for the end user, although lower costs and a better user experience are going to broaden the market overall. What most encourages me, what I find most exciting about this new trend is the support for innovation, the institutional support for innovation, institutional support for the very platforms that want to disrupt these same institutions. Capital markets are always changing, but they haven't seen a step change of this magnitude in at least decades. Over the next hour, we'll talk about the regulators' reactions and the considerable challenge that they have before them. We'll also talk about the reaction of market infrastructure participants, as well as that of professional investors. And we'll take what I expect will be a sober but open-minded look at the potential and the challenges and the risks ahead for the industry. To do that, I'm joined by three experts who each come at the evolution of this industry from different angles. I'm joined by Doney, the CEO of digital asset market technology provider Securrency. I'm joined by Nadine Chakar, the head of global markets of State Street Digital, which is the digital asset arm of one of the oldest banks in the US and one of the world's largest custodians. And I'm joined by Jonathan Steinberg, the CEO of WisdomTree, one of the world's leading exchange-traded product managers. So as you can see, it's going to be a varied discussion with expertise from different walks of this new industry that we are building. My name is Noelle Acheson. As Alyssa said, I'm head of market insights at Genesis Trading, which is one of the industry's leading OTC desks, lenders, and prime brokers. And let's get started. A bit of housekeeping first. As Alyssa mentioned, do please drop in your questions in the Q&A function that you have at the bottom of your screens, and I will do my best to get to them. It is going to be a fast-paced discussion, though, so if we can't get to them all, we'll address them either later or through social media, but feel free to reach out to all of us for all of your questions because we're learning together. Now, to start off, I'd like to ask each of the panelists to talk about their firm's involvement in digital assets. And Dan, let's start with you.
Yes, thanks, Noelle. And it's really a pleasure to be here on this great panel, especially with the fellow panelists. So Securrency is a blockchain financial service infrastructure company, and we use blockchain in order to automate compliance. We have tools to interoperate with legacy financial institutions' infrastructure. And more recently, over the past year, we issue DeFi instruments. So that's our relationship. We are assisting WisdomTree in the tokenization of their funds, and our banking partners in State Street and US Bank in transformation of the back office and middle office infrastructure to utilize blockchain technologies.
So basically the engine of this transformation that we're looking at here.
That's right.
Nadine, how about you?
So I run State Street Digital, as Noelle, you kindly indicated, and I represent State Street, who's, we have about 41 trillion dollars under assets. So a lot of over 10 to 15% of the world's asset run through our pipes every single day. So we're a hybrid between market infrastructure as well as really helping the world's most sophisticated investors. We support their investment process. So about a month ago, give or take, we set up State Street Digital, which I'm very proud to lead. And it's really to try to help our clients navigate this new digital divide. A lot of the things that you said in your introduction make a lot of sense. But still, what we're seeing is the world's largest asset managers, pension and asset owners are a little bit still looking at this with a lot of hesitancy. And our role is going to be to transform our infrastructure, but also help them navigate this new world order. So we're looking forward to the challenge, and very proud of our partnership with Dan and Securrency, as well as John on WisdomTree. We've done a lot of good things together, and we'll continue to forge ahead with that.
So you literally have one foot in both traditional and the new finance world, which would be a fascinating vantage point.
And that is what makes us a little bit unique. We do need to bring and create that bridge between the old and the new. I think it's going to be a while before everybody is on a new digital platform. So we do have that very unique mandate right now to help clients. We'll bring it together for them, and that's the role we play. So very excited about that.
Jonathan, WisdomTree is a very well-known name in traditional financial circles, becoming increasingly well-known also in digital asset circles, given the rapid pace at which you are launching new products. Talk to us a bit about your latest updates and where you're at.
So you referenced us as an ETF sponsor or an ETP sponsor. I would change that now. WisdomTree manages $75 billion in transparent exposures, and that includes exchange-traded funds and digital assets. So what we're participating, the way I would define the category is decentralized finance, not digital assets. And within DeFi, there's cryptocurrencies, there's blockchain infrastructure, and there are digital assets, which you might call creating the new wrapper. So we have crypto ETPs in Europe, Bitcoin and Ethereum. So we're, best in breed, we believe. We filed for it in the US. The SEC has not yet approved it. We are offering investor-friendly exposures to crypto through SMAs and model portfolios in the US. We are with State Street investors in Dan Doney's company, Securrency. So that's blockchain infrastructure. Really, the vision that he brought to WisdomTree was how to incorporate sort of interoperability and compliance into your design so that you could, with regulation, get the full benefit of the blockchain. And so we're taking his compliance-aware technology and wrapping traditional assets into it, like treasuries and gold. So we've recently filed with the SEC, which is something that would be revolutionary. Short-term treasuries native to the blockchain, but incorporating interoperability, which will be the beginning of some of that innovation that you discussed. Peer-to-peer funds, that's not been done. So we're very excited about where it's all going, and we couldn't do it without State Street, who is our custody bank, and Dan and others. I mean, regulation needs to come together for us all to reach our potential. So that's what we're doing.
That's very exciting, and definitely checks the innovation boxes of this discussion. Jonathan, I want to pull on something you said. You said not digital assets, more decentralized finance. Let's try and define decentralized finance. What is it to you? Do you think, is Bitcoin decentralized finance in your book?
I was thinking about it before as digital assets, but I really think the broadest definition is DeFi, which incorporates digital assets. And it really comes down to that innovation. I think it'll be the different business model, the gated compliance, the gated interaction models, which, if you look at what has transpired today, things like the Coinbase, very innovative, but they're still actually working with a very traditional business model. I believe, if you go back, so I've really evolved. I used to be a financial media company, WisdomTree, Individual Investor magazine. And when Netscape came out, you could see the death of print. But what you might not have seen is Netflix. Today, when you think about where this is going, I think the real business model change will be sort of around peer-to-peer and true interoperability and the global nature of blockchain. Financial services is truly regional and gated. And if that is what breaks, then the innovation will be fast and furious, and we're trying to be a part of it.
So it's not about the assets, it's about the business model. And you're right, we don't know where this is heading. Human beings have always been notoriously bad at understanding or seeing what new technologies will end up being used for. Nadine, what's your take? What is DeFi to you, and why do you think it's significant for the progress of finance?
So I was also reflecting on this question as you're asking Jonathan the question, and you think of DeFi and digital assets. I think your question was, is blockchain, is Bitcoin now? They're not mutually exclusive. From our perspective, obviously, digital assets can survive without DeFi, but probably not the other way around. So what we are, if you take its pure definition, a world that's self-regulated, no intermediaries, where innovation is key. I think that all that is very attractive. For me, though, it defines more of an evolution and the insertion of more of a peer-to-peer model into the institutional world. Now, that's a bit different for retail, but where we focus on is on the institutional world. And it goes back to the points Jonathan made. It is all about the innovation. It is about creating more liquidity in the market. It is, giving, democratizing, if you will, a bit the banking world. But I'll say that with a slight caution. We've seen a lot of some of the luminaries in the industry predicting the death of banks and so on. I truly don't believe, at least from our vantage point right now, and Jonathan is right, nobody could have predicted Netflix when the internet came out, but I think we'll repeat a cliche that's been printed over and over again. I think the proclamation that banks are dead, the death of banks is a bit premature here. So there's a role for all market intermediaries to play here, despite the fact that DeFi itself has been set up to get rid of the middleman, if you will, from the process. So for us, it's about innovation. It's creating this ecosystem that allows all our institutional clients to be able to, trade and interact with each other in a very secure model. But we'll see where at this point the only wild card is really regulation. And I know we're going to talk about that a bit later, but that's really going to define how far and how hard can you push that DeFi agenda for institutional clients.
And regulation is especially important to an institution such as State Street that has all sorts of regulations and compliance rules, much more so than some of the startups that we know and love.
Absolutely. I mean, we are a GSIFI. We are held to a higher standard, but also don't forget that the type of clients and assets that we safekeep. I mean, we're holding people's pension asset. This is their lifeline. There's got to be a level of security there, of finality, and when something goes wrong, who do you call? And in our world, you're calling State Street, who's going to stand behind these assets. That's, people work all their lives to, and that's the business Jonathan and I are there, is to help them achieve their dreams and aspiration in retirement. So there's a lot of things that need to be sorted out, and I still find it a little bit hard to think that we could throw away 200, 300 years of monetary and an investment framework, if you will, without some certainty on where we're heading. And that's the role that we hope to, that's the voice that we're going to bring to this conversation.
I have this discussion often with colleagues in the industry when they use decentralization as the rallying cry, as a solution to all of the ills in our current society. And the question basically is, how much decentralization do we really want? As you said, Nadine, we need someone to fix things when they go wrong, and decentralized finance, as the name says, is about disintermediating those centralized problem solvers. And again, this is something we're going to be talking about over the next hour, because it is, I think, one of the largest problems to fix in this spurt of innovation that we're seeing that isn't going to go away, but we do have to somehow figure out how to put this into the current system. And I like that you mentioned we didn't predict Netflix, Jonathan. We also, I imagine, could not have envisioned the emergence of connected dog collars or toasters, for that matter. And Dan, from the engine room, as we alluded to earlier, what kind of building or connectivity are you seeing between decentralized finance and centralized financial functions?
Yeah, we're seeing actually rapid movement of traditional financial service providers into this space, and it's easy to see why when you look at the DeFi world, where you have just very small teams of developers in, say, Aave or Compound, who've developed smart contracts that are able to perform very complex financial functions completely automatically. Things like lending, trading are now quite possible with zero human involvement. That radically transforms the back office costs associated with banking services. And what we see is banks, Nadine and John, have fully committed to embracing those cost savings associated with these new financial models. So it's worth really emphasizing several of the points about DeFi that make it so beneficial to banks. First, it's open. So any smart contract developer can produce a product into this space, and investors can access those capabilities very easy. It's transparent. So unlike legacy banking systems where investors really don't know what happens behind the scene in the black box, with DeFi, you can really see you can actually see the code and fully understand what happens with that instrument. And most importantly, it's efficient. As I mentioned to you, you can almost eliminate banking back office costs through proper use of DeFi. But that's not enough. And this is where institutional DeFi or regulated DeFi becomes so important. In the end, you need to do more than that in order to satisfy regulators. And there's several characteristics in what we call institutional DeFi that are worth talking about. You need accountability. So having a world where smart contracts and there's no one to blame if money gets lost or if a rug pull happens, regulators will never be satisfied with solutions where you don't have accountable parties. It must be compliant. So it's not satisfactory that tools, decentralized DeFi tools, are being used by launderers to launder money. And so ultimately, you require compliance functions associated with this, and resilient. So regulators require you to prove that you can recover from major outages. Things like, in the blockchain space, what if there's a quantum attack? What happens next? And without people answering these questions, you end up with counterparty risk, serious risk that's not yet acceptable for institutions at scale. The good news is all of those solutions exist, and it's actually possible to automate the compliance functions, to have accountable parties associated with DeFi protocols, and to create resilient systems. So the exciting thing is you can get all the benefits of DeFi in this institutional space, and it's not an oxymoron.
Speaking of resilience, I'm sure we will vividly remember May 19th when the market pretty much fell out of bed, and decentralized financial applications on certainly the derivative side saw over $1 billion worth of liquidations in one day, 1 billion in a nascent industry, and no decentralized exchange went down, which is a testament to the code and to the liquidity that these exchanges can drum up when needed. But Nadine, you mentioned some of the functions, Dan's mentioned several others, but what do you think centralized finance sees in decentralized finance? What are the main parts of DeFi that you think CeFi is most attracted to?
So Noelle, just on the $1 billion, just to put that in perspective, like we have clients that trade that in a minute, right? So the scale here is not so. Dan's points around resiliency, scalability are really important. I mean, we take trades that are bigger than $1 billion. So just to put that in perspective, I think the points that Dan made for the centralized world are very attractive, right? Our ability to be able to simplify our middle and back offices, right? To be able to innovate faster. The biggest complaint we all have is, banks are viewed to be slow and heavy and plagued with legacy setup. This new DeFi environment allows us a fresh start. And I know we keep talking about centralized and decentralized. I do view the future where everybody does coexist. And I've been on record by saying fintech companies are not they're not the enemy here at all. They're not the barbarians at the gate. If anything, they're at least from a banking perspective, I view them as enablers, as partners that are really going to help us change the view of finance and the world of finance out there. So for me, the attractiveness is it allows us, it gives us more flexibility in our cost basis, our ability to service our clients a lot better, because a lot of the things we talked about, again, like what does the centralized environment bring? It does bring consumer protection, right? And Jonathan's painfully aware of the SEC still looking at that, because consumer protection is really, really important. It's security, it's stability. But with all these new technologies and all the things that Dan and his colleagues in the industry are working on, it gives us flexibility, it gives us innovation, it helps us really put the client in the industry at the center of everything that we do, while fulfilling our regulatory and compliance obligations. And that's what we like about Securrency, right? Like, compliance is at the heart of everything that they're doing, which is critical for institutions like ourselves and WisdomTree, and that's not going to go away, right? And that's the difference between a centralized and decentralized. We do have obligations in not in one jurisdiction, but in our case, over hundreds of jurisdictions that we look at, and we've got to operate at that level. So, you know, and I am hopeful that there'll be that equilibrium and that hybrid model, that banks will do what they're good at, and the fintech and DeFi will do what they're good at. And at the end of the day, the winners are going to be the consumers, the institutional investors, and the clients that they serve in that equation. And we're very excited about that.
Obligations that are constantly changing as well. That's a lot to keep up with, especially when the regulators themselves are trying to get a handle on this. And you mentioned institutional investors. I want to talk a bit about them. Jonathan, you have, WisdomTree has several DeFi products already in the markets. What attracts institutional investors to those?
So I would say, you know, when you're talking about crypto specifically, it's almost been exclusively retail, that there's almost no institutional money. When it peaked at $2 trillion, virtually, you can't really say, you know, Elon Musk is an institutional investor. He's more of just a very successful individual investor. So it hasn't been about, it hasn't been very much institutional driven at all. I think in terms of DeFi, I mean, I can only speak about why WisdomTree is doing this. You know, we believe that there is an opportunity to enhance the user experience. And when I come from sort of the best of the old rails, ETFs are the most efficient way to hold assets, the best wrapper. We think it could be done even better using some of these new technologies. But you got to mostly out of a fear of being left behind. But you know, like when I got into ETFs, people say I got in 2006. State Street got in 1993 with the spider. In 2006, I feel I got in just in time. So we have to be early if we're going to be able to fend off the JP Morgans or the BlackRocks of the world.
Indeed, being early sometimes does come with additional risk, though, but it certainly does come with advantages. But a broader question, zooming out, do you think it's possible for DeFi to go mainstream without institutional involvement?
I think it goes mainstream. You know, when you launched ETFs, what was it for retail or institutional? People confuse it. In all investors want the same thing: better returns with less risk, whether you're a man or a woman, an institution or an individual. And this will level the playing field. And I'm only doing this because I think this will be the winning format over the coming decades, and it will include everybody.
Dan, what do you think? Do you think mainstream adoption of DeFi is a possibility?
Without institutional participation, again, it'll always be capped. I absolutely think DeFi has seen massive adoption, and that will only continue exponentially as long as the industry embraces the compliance component. Otherwise, it'll be capped. So the same way as Binance saying they're going to trade equities, and then 3 months later, they pull it back because of the regulatory pushback that they've got. At a certain size, DeFi gets the same pushback unless it embraces these aspects that I mentioned. Now, it was interesting that the title of this panel came out. I put it out on my LinkedIn post, and man, did I get pounded by people I respect, who are the purists in the blockchain world, who said regulated and DeFi are two opposite terms. They can't go together. And it's simply not true. There's only one parameter that we disagree on in terms of approach. The purists see the censorship-free nature of a blockchain and things like Bitcoin as the central value proposition. I think it's a value proposition, but not the only one. And the bottom line is censorship-free models are unaccountable and are frankly the tool of choice for laundering, tax evasion. And I've seen firsthand from my earlier career how they're used for human trafficking, for example. No good society can simply accept and say, well, too bad. The human traffickers are using Uniswap to cash in their goods, or they're getting a 7% return. And there's really nothing we can do about it. Let's just sit back and allow them the freedom of their choices. That's not acceptable. We have to do better than that. And so by taking these powerful tools and making them something where investors are protected, participants are aware of the risks, and where there's recovery models when things go wrong, is essential for its mainstream adoption.
And staying with you, Dan, for a second, what, in your opinion, does regulated DeFi look like? What are they regulating?
Yeah, we think it's quite possible. In fact, we are issuing DeFi instruments, and I'm using a narrow definition of DeFi here. That is the use of smart contracts to program financial processes or create assets. So, for example, you can create a loan as a DeFi using a DeFi contract that's fully self-processing. And then it's able to, when it gets repaid, pay its owners. It can be traded many, many times. And so that asset can have built into it, or at least attached to it, its regulatory framework, which then it will not allow an action, for example, that would exploit a user or result in lack of proper information. A transaction can't take place that breaks the rules. So that's an example of how regulation enforced via smart contracts can be attached to self-processing financial instruments. Just as one example, you can do the same thing with fund management, with equities, et cetera, a whole range of financial instruments and services.
So not eliminating the intermediaries, simply reducing their number, you still have to have someone who decides what the rules are and what the conditions are going to be. Is that right?
That's right. So you automate the compliance function such that now there's a certain human involvement in the attaching of attributes to individuals. The rules are pretty explicit and deterministic. And so then you simply automate the enforcement of it. So I can engage in a Uniswap transaction where if the other party is not authorized to receive the asset that I have or not qualified, it blocks the transaction, just as an example. So we can still interact peer-to-peer, but now the instruments actually know what they're allowed to do.
Nadine, what's your take on that? What does regulated DeFi look like to you?
So I agree with Dan, but when you elevate that to more of an institutional, it's not just the assets that move, but who the counterparties are, right? And that's why, a hedge fund under the rules that we have, for example, may or may not be able to interact with an asset owner just because of risk profile or credit rating or what have you. So that's why there's a question in the queue here, like, isn't this an oxymoron? Do you guys want to have your cake and eat it too? And the answer is no. there's still, unfortunately, in the institutional world, there will be a level of credit intermediation that would be required, at least for the immediate future. I don't know how that will look like in the future, the longer term. So to Dan's point, there's certain things you could certainly automate. There's certain things that you cannot. We all have to deal with capital treatments and credit exposures, and that there is no level of automation that's going to make that go away. And to go back to the point Dan made very earlier on, if we don't figure this out, then you're going to cap the impact of an institutional DeFi environment. So by actually having the intermediaries that are going to benefit from a lot of the efficiencies that these technologies are going to, so they'll be more competitive, right? So the cost will go down no matter what happens. And maybe less of the pie goes to the intermediary and more goes to the end consumer, which is what this should be all about at the end of the day, right? So there's still a role to be played that's there. And to your point, Noelle, there's regulations that need to be interpreted. There are capital rules that need to be interpreted. And believe me, if we could automate everything, we would. But there's still an element that needs to and that's why I do believe that intermediaries, whether they're banks, they're asset managers like Jonathan, there's others that will actually contribute to the growth and the prosperity of these DeFi models. We won't hold them back. If anything, we all want to enable them, but do that in a way that goes back to what we talked about. They're secure. There's somebody that's accountable. And who do I call if something doesn't work in a totally DeFi environment? At least you'll have an institution that will stand behind these offerings.
Jonathan, do you think that regulation or regulated DeFi can be decentralized, and will that matter to those that want to invest in it?
So I don't really care about the purists. It's not relevant to me. I embrace the foundational principles of regulation of know your customer, know the trade, anti-money laundering. It's unacceptable. It has to be. And so there's no business without it evolving. So I don't need it to be at the purist. I think that most people, and the end consumer doesn't care either. They are looking for the functionality, the improvement of their experience, the lowering of their cost. They want it to work. And so most people aren't that purist. I mean, what was interesting when State Street, I think they might overlap. When they launched the Spider, was that when they, in 93, is that when they launched Bitcoin? Or was that, maybe I have the dates wrong. But, Bitcoin, when it came out, people said, what an interesting exposure. And it was. That was one camp. But there was another camp that said, what an interesting way to use distributed ledger tech. And it really showed the potential for financial services, mostly around capital formation functions. I just think that, we are not, the people you're talking to now, we are what the regulator wants to engage with. They are looking for a path forward. There is a national security issue here. China is moving forward with a central bank digital dollar or currency. It has to evolve, or you will be left behind. It's like if the United States stayed with print and didn't adopt the internet, we wouldn't be America. It's going to be the same thing. Financial services, though, we are a higher standard than just pure media, and that standard has been globalized in many ways. Though there are definitely regional regulations that you're going to have to navigate. But quite frankly, this panel will play a role in unlocking the potential of, Dan's calling it institutional DeFi. I know Commissioner Berkowitz calls it responsible DeFi. They're the same. It's regulated DeFi. And that's where we are going to be playing with. That's what we're doing.
Jonathan, do you expect the eventual advent of central bank digital currencies to have any impact on the DeFi industry?
I think it's going to be massive. It will be the kind of event that changes the balance of power. So for a big institution, it will be their most cost-effective way to interact with the government. So some will jump on it and others won't. If they don't, they will be, you know, a print newspaper in a Netflix world. So you're going to have to move because others will move. So I definitely think that will be a seminal event when it happens, and I am fully expecting it to happen on the blockchain.
And Dan, a question for you. Jonathan is hinting at a world in which regulated DeFi has a transformational change. And it's the way he describes it, it's fairly easy to see how indeed that could happen, but regulation is about mitigating the rate of change. Do you, with the regulation that we're talking about here, do you think that could change the transformational potential of DeFi to incremental?
Actually, I have seen a very different response from regulators regarding these technologies. They're only mitigating innovation because the solutions that they require to protect investors and ensure high functioning markets have not come forward, but they're encouraging that innovation. And in fact, what you see with these tools is you can actually make their job easier. When you start with a substrate of all transactions being transparent and immutable, where people can't cook books and where parties can actually see what's going on within the space, that's a great place for regulators to start from. As parties innovate to make their job easier, they want that. They're encouraging our company and many others in the space to do exactly that, and they intend to get fully behind these things, but they can't abandon their responsibilities to protect investors, to ensure high functioning markets. They can't, and they won't across the board. So they're not standing back because they want to be slow. They're just waiting for the right solutions. And we know they're eager to move forward with the right solutions in place.
Because their constituents wanted the balancing act between supporting innovation, which is also part of their mandate, and protecting the end investor, which is a different equation when we're talking about retail investors versus institutional investors. And Nadine, what's your take on that? Do you think, especially in the institutional arena, we can have transformational change if it is regulated?
We are having transformational change as we speak, so it is happening, and I agree with Dan. I mean, the regulators have embraced this new world that we're all progressing towards. They just need that transparency. They need to understand and make sure that we understand what we're doing, right? Like we're not just running towards the new shiny toy. So they're really making us, really look at all elements of our responsibilities, make sure that we can explain it, and make sure they acquire the tools to be able to discharge their responsibilities. So Noelle, I'll tell you, our regulators, and we're regulated by many over around the world. And while I wish there's better harmonization and coordination among them, that would be my only wish. But I'll tell you, they are encouraging, they are engaging, and I'll tell you, for as much as I do these panels and talk to our clients every day, we're also engaging in a different way with our regulators, which is more of a partnership, education. Tell us where your pain points are. What can we do to help? So they're doing everything they can to fulfill, to ensure the safety and soundness of the financial systems, but also ensuring that we can innovate and support the end investor at the end of the day. So I am highly optimistic that we will get to an environment that works for institutional investors, worldwide. It may take a bit longer than we all like, but again, as I said earlier, it's taken us a couple hundred years to get where we're at today. So if it takes us, a year or two, I think that's okay. If that's the time and the price that we have to pay to get it right, then I think it's worthwhile.
I love the relative acceleration you're hinting at there. But Nadine, a follow-up question. You mentioned the difficulty of getting all the different global regulators to agree. One of the promises, one of the large potentials for decentralized finance is global access. Crypto assets are global assets and they run independent of boundaries. what would it take, in your opinion? First of all, how can this reconcile with regulators' mandates? And what would it take for the regulators to come to some kind of a global agreement?
That's a great question. All I can tell you, and I think both Dan and Jonathan made that point, right? You can't operate and flaunt these rules, right? Because very quickly, you're back in the principal's office very, very quickly, right? And nobody wants to do that. I think to your point, there is no boundaries, and you can't stop. You can't stop an idea, which really at the end of the day, DeFi is all about an idea, a culture that's emerging. And I think as regulators worldwide, they will realize, as they've come across historically and dealt with AML and KYC rules, when they realize there's a global interdependency, my guess is they learn more as the tools develop a little bit more, and they will have to agree on a common denominator. I'm not going to tell you it's going to be 100% the same, but if I at least had a 50% common base, I can deal with the delta. That's what we get paid to do, and this is why, again, intermediaries will not go away. I think there was another question in the chat that says, well, you need to exert compliance over an entity. Who's that entity, right? And it goes back to that whole argument again, why there's going to be somebody else in that chain. So I agree with Jonathan. We're not going to please everybody, but if we can please most people, then I think we'd have done our jobs, and most importantly, propelled our industry in a totally different orbit, which is what we're striving to do.
I love the comment about not being able to please everybody, because that is so true. Compromise is, however, one of the secrets of progress. And I'm known for being pedantic about vocabulary, and I'm certainly going to start to see some changing definitions over words such as entity, for instance. And Jonathan, over to you. WisdomTree has products training in many jurisdictions. What's your take on how the regulators are going to come together over the potential of DeFi and the risks?
They're going to need, the regulators are going to need a use case. So we're the third largest, State Street's the largest manager of gold in the world. I think we are the third largest manager of gold. We are trying to turn gold into currency on DeFi, on the blockchain. To do that, to make gold global, we will, as a use case, come against different regulators at different times, and we will have to deal with those regulators and unlock those. Multiple markets come at one time. Like my European gold ETPs are not really easily bought by US investors. GLD is not easily bought by European investors, but blockchain goes around the world. I think that's the promise of digital assets, making them more competitive, getting the scale of blockchain. And you're just going to have to put different use cases in front of the different regulators. It's going to take a tremendous amount of patience, commitment. You're going to have to bring the right parties together. So I feel fortunate to be sort of wrapped in with Nadine and Dan on this journey. And I think the regulators are looking for, as Dan and Nadine said, they are looking for how to navigate appropriately, so measured and balanced regulation that doesn't stifle innovation, but they're not paid to take undue risk. And so we're going to have to, all of us, answer the questions multiple times before it's fully unlocked. But but I'm optimistic.
I live in Europe, and we have a very different approach to financial regulation over here. We also have taken a very different approach to crypto markets regulation, the slow and very thoughtful approach. But the United States has the world's largest financial regulators, which I think is one of the reasons why so many of us are waiting to see what comes out of there. And Dan, I have a question for you. One thing that I've been following is what Wyoming has been pushing through. They do seem to be at the forefront of regulatory innovation when it comes to financial services. They even recently passed a bill that gave legal structure to decentralized autonomous organizations. What are your thoughts on that? Yeah,
it's actually a good question, Noelle. it is a new wrapper on an old thing. A decentralized autonomous organization is one where you have many participants in the ecosystem, that is stakeholders in the ecosystem who get to vote on behaviors of the ecosystem. But guess what? That's what a GP-LP structure is, where the limited parties or the shareholders get to vote on major corporate actions. It's not different in that basic framework. The place where it is different is how much of they can actually vote on and what type of control over the asset, in that there isn't a GP who's driving those actions, but it's not fundamentally different in the end. Now, again, we're excited. Wyoming is certainly a leader in terms of governing by first principle. So we also, as I mentioned, I'm here in Abu Dhabi, and we're working closely with the regulators within the FSRA, as well as the SEC and other jurisdictions as well. But these are regulators who are looking at first principles, and you have to, given how much changes in the blockchain world, what things are the same, what things are different. And what you see is an environment or a structure where shareholders can vote on the action of the organization. That's not a new concept.
Nadine, speaking of first principles, and I do love that concept because it ties into the definitions that we talked about before. What do you think will end up happening with the concept of decentralized autonomous organizations? Well, are they entities in your view?
I think the jury's still out on that, Noelle, and I was reading an article too that despite the fact Wyoming took some very courageous steps, if you will, innovative steps there, I'm not sure that, I think the article was they build it, will they come? And I think the answer was no. And we're seeing a lot more flock towards, I think it was Delaware and some other states that are there. There's a lot of, there's a lot of flaws, if you will, that still need to be worked out. I think from a compliance and an entity perspective, from a banking, it is hard for us to be able to KYC or AML. Like you need somebody, right? And this becomes more of a free for all, and I'm exaggerating to make a point. So I think there's going to have to be some cleaning up or tidying that process for the institutional side of the house. I'm not talking about retails, which it sounds like on the retail side it could be more than an acceptable process as it gets firmed out. I think on the institutional side that could be a bit of a challenge for us. At least in the regulatory framework that we're operating in today. But I'll profess that my knowledge isn't very deep on that side, just because it's not something that we deal with on a daily basis yet.
We're all learning as we go along, and that's one of the fascinating things about this. They've always said that blockchain technology is not really a solution. It is a tool that helps us to ask better questions, and a tool that enables us to more closely examine some of the rules that we have assumed were just part of the landscape. That is one of the exciting parts. Since we're nearing the end of time now, I'd like to get each of your views on what you think the main hurdles are regarding the regulation and the institutional acceptance of decentralized financial applications. Dan, and I'd like to start with you. What are the main hurdles?
First, Nadine made the point of being able to have the accountable party or understand who the counterparties are associated with these assets. DeFi in its purest form is not suitable for that reason. But again, the second is full regulatory understanding of these concepts, so that they can see how the rules that they care about are enforced in these particular assets. But both of these things are coming along, and there are solutions to these problems. So I think you're actually going to see a much faster uptake than many people realize.
Nadine, what in your view are the main hurdles?
I mean, I can only repeat what Dan said. That's been, if you will, the general theme of our responses, I think, there. I would think, though, that we'll see the institutional side, if you will, dip its toe. I don't think they'll take the big plunge, so it'll be moderate and measured. And I think you'll see stepping stone will probably start with something that's more of a controlled peer-to-peer and eventually evolve. And I think we'll be able to tell, obviously Jonathan has loads of funds waiting for approval, but once we have that first one, I think we'll see the floodgates open from there. And I think it behooves us all as an industry, whether it's fintech providers, banks, asset managers, and so on, to really help our regulators acquire the tools that they need, pledge to give them the transparency and collaboration and cooperation that they require, so they can help us. So we need to help them to help us, if you will, to move forward. But I think it'll be, I agree with Dan, it will come sooner than we expect, but I don't think it'll be as big as we expect at the outset. I think it'll take a bit of time. Adoption will take a bit of time.
When you say sooner than we expect, do you have a time frame that you sort of, a bandwidth, I should say, of time frames you're thinking of?
I got muted here. I think there's two things that I'm looking for. One is the SEC moving, and once they give the first approval, it will be important. I think the Federal Reserve also signaling if they're going to move on CBDC. Those are really two dates that, for me, the clock will start ticking from there for institutional adoption.
And greater clarity around stablecoin regulation as well would be helpful for the entire industry. And Jonathan, what about you? What do you think the main hurdles are and the potential for institutional acceptance?
I think the main hurdles are regulatory approval. So for me, I mean, we have two filings in front of the SEC. One is a Bitcoin ETP in the US. The other is digital treasuries on the blockchain. I think the Bitcoin is irrelevant. It'll be approving treasuries, which is something that the government can get their heads around, that incorporates interoperability. That'll be one of the major accomplishments, and we're doing it with State Street's help, with Securrency's help. If we get that through, that'll be one of the major accomplishments. And then I agree with Nadine. If you want the floodgates, if you want true, all institutional, you'll get a central bank digital currency. And I'm sure it'll happen because it has to happen, or you will be surrendering the dollar as the reserve currency. So I'm optimistic. And I think you'll see something magical over the course of the next 12 months.
Speaking of the next 12 months, and we have literally 90, well, not even 60 seconds left, I do want to quickly get fire round of what you think we'll be worrying about this time next year. Let's assume that we're here talking 12 months from now, the same group of people. What's your number one concern, Nadine, 12 months from now?
If everything we talked about didn't happen.
Fair enough, and we're still talking about the same problem.
We're still talking about the same thing. That would be an issue.
Jonathan, what do you think we'll be worried about 12 months from now?
Well, I think that's the truth, the same thing, because right now you have enough institutional involvement where we have to get some successes and to get past it. You know, launching ETFs took something like 9 years. So once it happened, then the consumer, institutional and retail, eventually found the structure. But you had to get that first approvals. That's what I think we're waiting for. And if it doesn't happen, we'll be immensely frustrated, everybody on this call.
Yes, we'll still be talking about the next 12 months. Dan, how about you? Just in a few seconds.
I'm going to throw a wild one out there, a quantum attack of a blockchain ledger.
Yes, we haven't talked about that risk, have we? We'll have to put a pin in that.
That would set things back, yeah.
It would indeed. This has been a fascinating conversation. I could happily talk to all of you for the rest of the afternoon, but we do need to end up now. Thank you all so much for your time. Thank you, audience, for joining us. Thank you for throwing in your questions. We did try to get to some of them. And thank you, everyone. It's been fun. Let's talk again, hopefully in 12 months.
Thank you,
Noelle.
Bye-bye.
Bye-bye.